Hello and welcome to Scrolling with Ceazor. Today is March 12th, 2026. Okay, so I got lots of news for you today, but as always, this is not financial advice. You do what you got to do with your money and you make your own decisions. However, let's take a look at the chart today. When I first opened this chart and before I started collecting the tweets, it was a red candle and now it's going green. So does that mean the prophecy has come true and we are going to Valhalla? I hope so. I hope so. I hope so. But anyways, the market, I'm not going to make any changes to this, of course. Gold is basically right in the middle, so no changes there either. And I'm just going to leave my positions as are. Moving on. So I should probably add hype to this. Next week, I'm going to add hype to this and show you where my hype positions are as well. Okay, so let's go over to Pharos and read the daily digest about stablecoins today. So PSI reads 91 for the fourth straight day, last dipping below its level at March 11th. Let's go see. So SUSD and USDA both escalated from watch to alert. So if we go to that, where is it? Stability index, maybe? I gotta get my, where is that? Peg tracker, depeg tracker. So it's loading. So here we have, let's see if we can find it in here. It's not on here. That's bizarre, but here is USDA. And where's SUSD? Anyhow, I guess it's not showing up on here for some reason. Anyhow, so basically, yeah, these two tokens are pretty wrecked. They went from watch to alert in the last 24 hours, both flagged as crossing divergence, pushing alert count from 2 to 4. USDA at $270 million is one worth watching. SUSD is at only 41 million. So yeah, check it out. Pi USD printed almost 60 million yesterday. RL USD, I'm not sure what that is, did another 30 million. Both accelerating in the market and adding 4 billion in 7 days. Yet USDC, USDS, and DAI all reversed to net negative yesterday after absorbing the bulk of that weekly gain. USDC hit 10 million lighter on the day despite the functional. So that's kind of normal news. I don't see anything extremely newsworthy, but I do think it's good to check in on things normally and see if there's anything that concerns us. Okay, so moving on. So let's get into the Twitter news and go through them one by one. As always, not in any specific order. So the first one here we have is Stacy Murr. She's retweeting a DWF Ventures article where they compare tokens to equities, the valuation gap. Now, I did not read this article, I will admit, but I have read her tweet, and I will, of course, share this and you can go and read deeper. But let's see what Stacy has kind of TLDR'd that article for us. The token playbook worked. The token playbook that worked in 2021, 2022 is broken. 90% of the token launches in 2025 are below TGE price. So everything's just getting sold, wrecked. I think it's because there's a lot of airdrops and people just take the free money and leave. People are trying to get in early, and they're not trying to invest in products that they believe in. They're just trying to flip, like an NFT type flip. So just get in those early things and then sell, and everybody's just trying to get their money back all the time. There is obviously also the problem of there is just too much choice in the market. There is a little bit of innovation going on, but the vast majority of things are just people recycling things, and people just want to get in early, sell, and get their money back and move on to the next thing. I'm hoping that we can correct this mentality in the space as more and more of those people hopefully get wrecked and leave, and we have more serious actors in the space. But let's read it. But crypto IPOs raised 48x more in 2025 than 2024. So that's a lot. So a lot more money is in the system. Stocks in crypto are valued higher than than tokens for the same revenue. So that's an interesting one. So people are still considering stocks to be the safer bet than tokens. Now I can kind of speculate on why this is, because most stocks are for companies that produce real world products. So they actually provide real services, real things. People are paying, real humans are paying for things to be done. Whereas tokens are all digital. They're all just services. There's no actual, you can't, invest in a token which is for a company that's selling hamburgers, for example. But I think this can change. I think like McDonald's could launch a token instead of doing an IPO if they're already publicly traded, so it's kind of difficult now. But I think it's the technology is there for them to do this. It's just a matter of regulations and so forth. Now maybe some newer companies come out, and when they want to go public or when they want to do a raise, they can use tokens instead of the traditional stock system. Crypto M&A hit an 5-time year high, 42 billion in trading, exchange, and payments. So crypto is still alive, like it's not dead, okay? More capital is flowing into the space than ever through equities and acquisitions instead of token launches. It's hard to be bearish on that. So I agree with her most of it. Like I'm aligned with what she's saying here, and obviously I believe she is. These comments are from the article, and they're not her own ideas. But I'm not sure. Again, I did not read this article from DWF Ventures, so I would suggest you to read it. I might read it after, but now I'm going to move on. So Adavark is retweeting the classic meme of like vesting Cliff Reach, but like it has a whole crowd of people. So he's retweeting Optimus Prime, and he says, Optimus Prime says, today we shared difficult news with the OP Labs team. Our priority was to communicate with the impacted people and give the team time to process the news before sharing it publicly. This decision reflects the narrowing of our focus, not our runway. And to get in a little bit, let's keep going. I'm sharing the note I sent to the team earlier today, and I strongly encourage teams across the ecosystem to reach out to people leaving OP Labs because they are talented engineers, operators, and builders who helped build Optimism into what it is today. If you are genuinely hiring, feel free to shoot me a DM with your open roles, and I will make introductions with dual consent. Okay, so this is kind of sad and scary, like a bunch of people leaving Optimism. Now, Adavark is claiming that it's because their OP tokens have finally vested, and now it's time to go find another job with another allocation and a salary on top of that. But I feel kind of bad because like Optimism's like one of the OG L2s. We've got Arbitrum and Optimism. They are first L2s. They pioneered what is L2, and then everybody, a lot of projects launched L2s based on the OP stack, Optimism stack. So I feel it's kind of sad that it's kind of like, I'm not saying it's going to die. I'm not saying they're going to turn it off, but we don't want, I feel much less safe using it if the entire dev team is just walking away. OP Labs team is just going to walk away. Like, who's going to run it? Who's going to update it? Who's going to keep it going? I don't know. I have to dig a little bit deeper, but it is a little bit scary, and it makes me kind of worry. Now, even like with the news a little while ago about Base deciding to leave the OP stack as well, that's a little bit scary. Maybe Optimus Prime will give us some more news about the stability and safety of the Optimism chain and so forth. But I don't know. We'll see. So I thought I'd share it. I feel a little bit sad about it, but at the same time, business, right? And people got to do what they got to do. Moving on. So here we have FX protocol. This is something that I haven't thought about in a while, and it's like is a core feature of this protocol. Like you can borrow FXUSD and you don't have to pay interest. So this is one of the few protocols in DeFi where you borrow and you don't pay interest. So like obviously you have to pay an upfront borrow fee. So you don't want to borrow and immediately repay in the next day. But you do, it's fantastic for if you want to borrow assets and then buy something in the real world, and then you don't have to pay interest on it. So you can live off of FXUSD. So you can, put in ETH, use ETH, borrow FXUSD, and then use that FXUSD, turn it into stable coins, off ramp it to the real world, buy a car, pay your rent, pay your mortgage, whatever. And it's not like you're paying with borrowed, with interest. So you're not buying food and then having interest payments on the food you bought, right? Which is very good. Like if you were to do a CDP on almost any other protocol, you would have to pay that. So it's a fantastic option for borrowing versus ETH and not having to pay interest. Okay, so consider that. I do have a video if you want to understand it more deeper, or you can go and read their docs or go ask them more questions. Okay, here we go. Here we have Danger retweeting Hasu. Hasu's talking about Sky Ecosystems SUSD and how it has been just constantly pumping in market cap, right? It's just growing, and it's at like almost 12 billion, well, 11 billion right now. That's pretty crazy. $11 billion in stablecoins in a decentralized sort of, like I wouldn't say it's completely decentralized. It's pretty much backed by USDC, but it is a DeFi kingpin, a DeFi OG, and it is great that it's utilized so heavily. Okay, so but what Danger talks about here is he's like, one of the interesting things which was surprising to me, given I'm a big fan of Aperion Paper's tweets. Sky has done well, extremely well actually, despite becoming more centralized and more directly under Rune's influence. So you can, if you want to dig deeper, you can go through Aperium's or Aperion Paper's tweets about this. But basically, there's like some like I'm not gonna call it bad debt, but there's like some SUSD that's like backed by like this like Rune coin, and they have their, like, they've isolated it, which is fantastic. It's like got this own like ST USDS as opposed to SUSDS. So I would like highly suggest, if you're like thinking about ST USDS, you dig deep and you look better and make sure you understand what you're getting exposed to. SUSDS is just their basic savings rate, which is much more safer than what, in my opinion, than ST USDS because of its exposure. But it's obviously doing what it needs to do. The team is obviously building properly. They're doing business development. They're getting capital in. The system is sucking in dollars. And I hold SUSDS, so I kind of pay attention and I kind of watch it. But yeah, take a look at it and see what you want to know. Do a little bit a little bit more digging deeper to find out more news about this. But anyhow, I thought I would mention it and kind of talk a little bit about it. Okay, moving on to another stablecoin. Frax Finance's FXUSD. But here is the staked version of it. If you stake it, it's just basically interest-bearing stablecoin, and as you can see, it has a pretty steady based on this picture here, it's a steady 4.25% interest rate, which beats SUSD, Builders, Athena's. So I hold a substantial amount of FRX USD. I feel safe with it. I put it actually on their Fraxtal blockchain so I can get some Frax points as well. Now, I'm not sure if their Fraxtal blockchain is ever going to launch those points into a coin, but I figure, I can get 4% on my stable coins, 4.5 or whatever it is on my stable coins, and get some points, and hopefully those points will eventually monetize and become valuable. But so anyways, you can check it out. It's definitely one of the, like, I like Frax. Like it's very comparable to SUSD, or so USDS, in the sense that like they're both, you know, heavily backed by like treasury bills and stuff like this. So like they're very like real world asset, like TradFi stablecoin. They're not like a DeFi stablecoin like the trustless force like FXUSD or Bold or CRVUSD. They're not backed by ETH a lot and stuff like that. They're very traditional finance versions of stablecoins, but have good interest rate. But I always like Frax Finance because it's such a huge ecosystem of development. They know the tech. They know DeFi very well. They're integrated all over the place, and I feel like if you go into the Frax Finance Telegram and you ask questions, you get answers, and you get answers from the CEO. Like I can ping Sam Kazmian and he will answer me. You can ask him questions in the Telegram and he will answer them. Whereas I don't even know who the leader of Sky is anymore. And I don't, like, if I go into the Telegram, it's just like, yeah, it's not the same vibe. So anyhow, you can check them out. Obviously, you know, you should consider market cap and stuff like that. If you are a whale and you want to put $200 million, then maybe, you know, throwing that into SFRX has a lot more risk than throwing it into SUSD or so USDS or whatever, because of the liquidity levels and stuff like that. But yeah, there's my shield for Frax. Okay, moving on. Here we have Pandora. Pandora is this is Pandora prediction markets. This is a simple things, just 2 questions about football. These round 16 of the Champions League's kickoff, 2 games you can bet on, win yes or no, blah blah blah. Right? Now this is not a super interesting question in the sense of you know, the possibilities of Pandora's questions that you would see there. But I do want to talk a little bit about prediction markets in general because of this tweet. I think prediction markets are so popular and so great is because anyone can bet on prediction markets in the sense that there's some geo-blocking stuff going on and like that. But for the most part, anyone can bet on it and they don't need to do research. Like they don't need to understand it. It's not like when you bet on like a governance coin for some DeFi protocol. You had better understand that DeFi protocol and how it's going to generate revenue, or how it's going to affect the token that you're buying and how your token you buy interacts with that DeFi protocol. You need to understand that. But with like prediction markets, it's just simple. Like you just go, you read the question, you bet yes or no. You can do more research if you think. But in this case, it's like sports. People have been betting on sports for like generations, right? Maybe even longer. I have no idea, but like, so it's a very simple user experience. It might be a little bit difficult to get cash into these things, but once you have cash in there, it's very easy to make these bets, right? These predictions, or it's very easy to make a bet on a prediction market because it's so binary and so easy to understand, and it's just pure like normal language. There's no logical like deduction. It's just a simple question, yes or no, and those questions are generally about things that you would understand, like sporting matches. But anyway, so I hope Pandora does get a little bit more utility or use case. Like I said, it's permissionless. You can go and make your own questions. You can make a little bet between you and your buddies and have it run for 2 days. Whatever, just go check it out. It's pretty user friendly. Moving on, here you have Rameses. Rameses is just talking about some pretty juicy stablecoin, pretty juicy LP rewards on Ramses on Hype. You can check them out. There is like some like 34% on like 2 of the stable coins. Now, of course, you know, that's super tight and you probably go out of range. So you'll probably get around 9% if you widen it out a little bit. But Yeah, there's two stable coins, and then like another stable coin pool, which is hype versus K hype, which is pretty much a stable coin as well. So you can check these out. It's pretty good option to check out. Now, the reason why I'm mentioning it is because I did say I'm going to add my hype position here to kind of check the ranges. I think I have it in Deck Screener, but I just check it every day. I just go to the front end and check. So anyhow, but you can check this out. It's one of my favorite places to provide liquidity because the user experience is designed for people who know how to use concentrated liquidity. The front end is very friendly. There's a lot of little features. You can adjust your range if it goes out of range. You can adjust the range without pulling the liquidity. All kinds of cool stuff like that. I highly suggest you check it out. Moving on, we have Spearmint. Now this I commented on already, and it's quite crazy. Yesterday we talked about Aave. Had some cascading liquidations. Yesterday I said something like 700K was like lost. Here he's saying 27 million in liquidations. So I don't really know, and I don't have any positions on Aave like CDPs. I don't use Aave for CDPs. To borrow, I find there's no reason for me to do it. But if you're in a vault, the vault might be doing it for you, right? So you should be aware. This is news, but let's see what he says. So Chaos Labs gets paid $3 million a year by Aave DAO. So the Aave DAO, not Aave Labs, Aave DAO is paying Chaos Labs $3 million a year. Their website literally says their job is to mitigate Oracle manipulation and price risk. So Chaos Labs' job is to make sure the Oracle is good. Now, if you remember the news from yesterday, the Oracle was mispriced and a whole bunch of people got liquidated. So their edge risk Oracle pushed incorrect update that underpriced WST ETH by almost 3%, triggering 27 million in liquidations across users with healthy positions. So the DAO pays Chaos Lab to prevent Oracle issues, and now the DAO has to cover the losses caused by their Oracle. It's insane to me that a proprietary closed source off-chain system has the ability to push price updates to the largest DeFi protocol. I agree with him completely. Like, how can some black box have this much power over Aave? It's crazy. It's like, obviously they need multiple oracles, and they could pay Chaos Labs. They could pay Chaos Labs, they could pay Chainlink, they could pay these oracles to run oracles, which they have to pay them, right? But they can't give this much power to a single entity. And the fact that the DAO pays them to do this, and now the DAO has to foot the bill for the losses, because people are pissed, right? So it's not the DAO's. Obviously, Chaos Labs has to pay. Even if they go bankrupt, it's their fault. It's their problem. They pushed the wrong price into Aave. They have to pay. It's as simple as that. There's no possible way. I'm completely with him. It's absolute insanity that the DAO has to foot the bill. And are they going to continue with Chaos Lab? Fire Chaos Labs then. Goodbye. You guys are done. Toast. Spread their name all over the place. They pushed a improper Oracle price, liquidated a bunch of people, and then they don't want to pay for their mistake. That is insanity. Moving on. Julian. I talked about Julian yesterday, and here he has an interesting tweet. He did a Substack. I think he's kind of like an up and rising Chad. He's got 1,000, 2,000 followers. So you can check him out, give him a follow. But basically, he's got this argument about why Ethereum needs encrypted mempools. Not just secret, not just private, actually encrypted. So the people who are building blocks, they don't know what it is until the block is built. Something like that, okay? So he says private mempools are brittle. So here are the reasons he comes. So private mempools are brittle. Every 40 seconds, a user gets sandwiches on Ethereum. So there's still sandwich attacks on Ethereum. Institutions cannot use private because it's like going through a trusted network of block builders, right? That's got to change. He says an advantage of on-chain markets is clear rules for traders. So he's saying that encrypted will give more clear rules for traders, like remove instead of, however, this transparency cannot be fully leveraged because MEV ecosystem is needed to protect the traders. So the traders are depending now on the MEVs to not extract them, right? Not sandwich them and take, do this kind of stuff. Now, of course, you can set slippage and you can set your transaction so that you won't get sandwiched and stuff like that. And there are protocols out there that are sandwich attack resistant or proof, like a Carbon DeFi is a good example. You will get what you ask for. It's as simple as that. There's no, if you set your price to X, like say $2,000 for 1 ETH, you will get $2,000 for 1 ETH or USDC or whatever, right? Moving on, we have the builder market is entrenched. Private order flow deals a dominant block value. Encrypted mempools are a necessary step to move away from that. So yeah, like to become a builder, I guess it's difficult. I don't know. I'm not an expert on this, but I guess you need some sort of level of permission. But I don't know. Ethereum needs encrypted mempools fast because path dependency matters. DeFi innovation builds on today's infrastructure network of searchers. It cannot build on infrastructure of the future, trustless and guaranteed transaction inclusion. So that's a key point. Like because you're using trusted block builders, your transaction is not guaranteed to be included, right? So anyways, you can read his Substack. I didn't open it. I'm sure it's probably pretty heavy read, but you can check it out. And I'm sure he has a pretty good, based on what I've read so far, he's got some good points. And it's kind of above my head a little bit, so I'm going to kind of leave this to the experts to figure out what's best for me in this case. Let's move on, okay? So here we have Liquidity. Liquidity is retweeting something that Governor DAO did. So basically, using Liquidity isn't just convenient, it's a statement. Governor borrowed bold against ETH. 0 ETH sold, all of the upside preserved, 100% immutable DeFi and no TradFi exposure. We're proud to walk the walk and talk the talk while helping build the financial system. We see who is next. So yeah, what's going on here? Governor DAO is doing what I have always said ETH Foundation should be doing. And that is, don't sell your ETH for stable coins. Just CDP it. Put it in Liquidity, put it in FX Protocol, put it in Curve, put it in any of these trustless. And in this case, Liquidity is completely immutable. They cannot change anything. So if you are ETH Foundation, or in this case, you are Governor, all you have to do is read the code. Just audit it. See, make sure you understand it. Make sure you think it's safe. And then borrow stable coins versus it. Now, if in the case you get liquidated because you borrow too much and ETH continues to go down, then that's the same as you've sold it. You're selling it in the future, right? So you might as well do this and keep the upside potential and not contribute to the downflow of your asset. I think all ecosystems should CDP their coin instead of selling it for stable coins. It's just as simple as that. Like it doesn't make sense to me. Like why any protocol, any project would sell their coin if they could CDP it. Now, of course, this requires some management. You might get liquidated and that would create cascading effects, or you're selling the bottom, but like ETH Foundation has historically been selling the bottom every single time, so they might as well do this, right? And possibly get liquidated and possibly not, and keep their ETH, right? And in Liquidity's case, they don't even need to use ETH. They can use Rocket Pool ETH or or like staked ETH, and they can get more ETH while they're using their stablecoins. It just makes 100% sense to me. In Liquidity, they can set their borrowing rate. They get immediate money. They keep their their ETH. It just makes so much sense. Okay, so Etherscan has produced a long article here. You can read through it, and it's basically talking about address poisoning attacks, which is a feature or a bug or whatever you want to call this. A negative feature of Etherscan is that there's a lot of this, and it's rising. So this guy Nima, he did a transaction. And then he's signed up to Etherscan email announcements, and he did some transactions. He said he did 2, and then he got 89 emails of like possible poisoning attack things. It blows my mind that poisoning attacks is still a thing, and people are still doing this, because it's like. I talked about this a few days ago, and I'm gonna echo it again today. It's so easy to avoid poisoning attacks. The way to avoid them is to go to the source where you got the address. So what I understand, maybe I should read through this entire article, but what I understand is this. Okay, this is how people are getting poison attacked. They send a transaction. So usually, think about it this way: like, I want to send a transaction to someone. So I got to copy the address of the token I want to send. I got to copy the address of the person I want to send it to. I send it. I make sure that it went through and everything was okay. I send like a $5 or $1 or something like that. I make sure it's okay, and then I look at Etherscan. I see the transaction. I copy the address. It looks very similar, but it's very slightly different, right? Because someone poisoned me. They put a similar transaction with a different address, and then I send my big transaction to that new address by mistake. So the way to avoid it is just go to the source of the address. So you're talking to someone on Telegram, or you got an address from Binance to send your money to Binance because you want to rage quit crypto, or whatever the thing is that you want, the place you want to send it. If you go to that source to get your address, and then you send them a test transaction, you make sure it lands, and then you go back to the source to get that address again, and then you send the rest. It's as simple as that. I don't understand why people are using Etherscan to their former transactions to get their addresses, especially with this poisoning. And this is a long article, so you can read it and check it out. Maybe this is, there's quite a few of these like poisoning attacks. It's a big rise. There's a lot of this happening now, and it's being like done automatically. It's not like some guy sitting there watching you. It's just there's bots just watching for transactions and then just sending like all of these. And they're paying gas and stuff like that. And so I don't think poisoning attacks, we need to kill it in the sense of, because they're burning gas. Let them burn gas. They're scammers. Let them waste their money. But if they stop being successful, they will stop doing it. It's as simple as that. So just stop going to Etherscan and checking your old transactions to get your addresses. Go to the source. And if you haven't sent a transaction to that person in a long time, then send that person another email or another text message, or go onto Binance and get another address from Binance. And like, it's probably healthy to even change your Binance receiving address once in a while. So anyways, check it out. Long article on poisoning attacks. A lot. So I don't know. I think Etherscan is fantastic. I use it a lot, especially for like checking contracts, reading code, even sending transactions to contracts by, connecting my wallet to Etherscan and sending it. But I never, ever copy destination addresses from Etherscan. Moving on. So here we have James Sephirat. this is great news for us for the most part. So BlackRock has launching ETH staking ETF today. That's great. So yeah, you can, yeah, it's called ETHB. It's the same as ETH-A in the sense of the fees, but the fees are a little bit down for the first year. So it's only 0.12% for the first year. So yeah, if you are a TradFi person or you know someone who's a TradFi person, this is a ETF that is ETH staked, so it has yield, and they're going to take their fees, but it's now you can buy this in your bank. You can put this in your TFSA or in whatever, like 401k or whatever it is that like you use in your bank to invest. So this is a fantastic product that you can give to normie friends. I'm not gonna buy it too much. I might buy it for my retirement savings accounts that are tax free, my tax sheltered stuff. I might buy something like this for that, but not, I'm not gonna buy spot, or I'm not gonna buy this thing and put it in a direct investing account where I have to pay taxes on it. I might as well just stake ETH. Buy Lido staked ETH, Rocket Pool ETH, this kind of stuff. But it's still fantastic because it's going to hopefully draw more capital into buying ETH and then having that ETH staked. Now, I don't know the details of who's going to stake it. It does see like ETH, we already knew ETHB will have Coinbase as its custody, so it's going to be CB ETH. Yeah, so there, check it out. Thanks, BlackRock, for joining the game. Moving on. This is a long tweet, but it's worth reading. Red Phone here. Quick thoughts on market turmoil. So I'm going to read it. As always, he always, whenever he tweets, I read it, and I like what he says. So here goes. So number 1 point, market turmoil. Number 1, make sure your financial guru, whoever you listen to, has gnarled up, wrinkly-faced, gray hair, and lots of cash. You need someone who's still in it for the love of the game. Now, I don't want to sound like a conceited, self-trumpeting dickwad, but that's kind of me. Like, I'm not gray-faced, wrinkly-haired, wrinkly-faced, gray-haired. I'm pretty, handsome and swagger. But at the same time, I'm still in it for the love of the game. Now, of course, I'm not stinking rich either. If I had $50 million, I might not be talking right now, but here I am, still grinding away and still doing it because I love the DeFi. Why? Number 2, why? We haven't seen a market set up like this since COVID? Cash bazookas artificially propped up markets then, though, and you cannot summon energy with cash bazookas. Yeah, I don't really know what he's saying here, but right now is a pretty prime time to consider spending some of your powder. That's what he's saying, Number 3, I think 2007, 2008 is a much better trading analogy. If you weren't active back then, it was utter madness. You'd get limit up days followed by limit down days and vice versa. You thought things were ending, and then a new company went bankrupt, and then you were certain the whole house of cards was collapsing. It was a constant upending whiplash that made you feel like puking. So he's predicting high volatility, lots of big up candles and down candles. So what I would suggest you do, if you believe him to be right in this factor, is manage your CDPs carefully. Your leveraged positions. CDP is leveraged position. Okay, you put in ETH, you borrow stable coins. That's a leveraged position. It's not the same as looping. It's not as risky as looping, and it's definitely not as risky as leverage perp trading. But if we get a nice big green candle tomorrow, don't immediately borrow a whole bunch more stable coins. You can borrow some, but predict that, like, if we go up, say, 25% tomorrow, predict that we could come down 30%, 35% the next day. So just, get ready for big swings. Okay, number 4, But even the market was a great analogy. Probably best is the 1973 Arab-Israel War, Yom Kippur War. A few things that say, yeah, I'm going to skip this part. It's just like, talking about war and how things were very volatile and swingy during that war. Okay, number 5, the U.S. imported about 35% of its oil at the time, mostly from Arab states. There was no way to replace it. The embargo created genuine physical shortages. Gas stations ran dry. The government implemented odd, even rationing. You could only buy gas on odd or even days depending on your license plate. I do remember this kind of stuff. So I don't think it's the case now. There's oil from all over the place. But, it's still quite dependent on the Arab oil. So, like you can see it at the pump right now, right? And, the governments around the world, especially America, they have stockpiles as well. Number 6, the weird part is how calm markets have been. My guess why. So, yeah, like now he's going to talk about why. Like if you look at the markets, like there's a war right now, people dying, bombs being dropped on oil, on oil country, and the charts look like this. It's bizarre and it's weird, but he's right. So let's say why. LLMs turbocharged a trend that is already happening, a complete devaluation of language. Everything is historic. Everything will change your life. This air-fried cabbage chip will clear your arteries and make your skin glow and 10x your libido. So yeah, there's like marketing is supercharged. So people are kind of just feeding on that. So I think that's why they're just being distracted from the terrible things that are happening in the Middle East right now. I guess that's what he's saying. Number 8. So when something genuinely historically actually happens, we write it off. We've been trained by thousands of false alarms. A boy who cried wolf, but the wolf is real this time, and we're still laughing at him. Yeah. So like we don't really. I don't take the government serious anymore. I don't like when they say, oh, blah, blah, blah. Like the other day, like the White House tweeted out like, go USA, and like this video of like USA's like just like the war machine and how like, macho it is and stuff like that. And I just laugh at it. It's just like ridiculous. But when I was a kid, it would have been like, it would have like inspired people, right? So that game is over, right? We are just numb, right? Markets are waking the fuck up right now, and I'd be really surprised if we don't get some limit down and limit up for days. So, yeah, so maybe now he's saying, maybe right now is not the best time to buy, like don't take all your powder and dump it into like anything right now, because tomorrow could be a 25% green candle and tomorrow could be a 25% red candle. The best thing to do, in my opinion, is something like this. A nice wide range. I wish I had more down below. I might put more below. Where, you're buying low, you're selling high. And this is fantastic. I love it so much. It's like interest-bearing ETH versus interest-bearing stablecoins. And my interest-bearing stablecoins are earning APR below, and my ETH is earning APR above. And if it goes down, I'm going to buy some. And if it goes up, I'm going to sell some. And I'm getting interest on both sides. It's just brilliant. Moving on. If you're having trouble with peace of mind, focus on what you can control. Make sure you've got your real assets in order. Access to food, water, medicine, Starlink, backup energy. Yeah, so that's pretty gloomy and scary, but I think we're okay mostly in the West, but still, you never know, right? The surf is rising. Not much we can do but ride the fuck out of it. F war. Wishing you peace and love wherever you are. Thanks. Some deep thoughts from Red Phone here, as always. I love it when he posts these long forms and drops some interesting thoughts. Moving on. So Korn is my go-to guy when I want to ask Yearn questions. He's BD for Yearn, but he's obviously knows what's going on there. So he's kind of the guy who I go to whenever I have questions. And he's retweeting right now that Yearn also has a BTC carry trade vault coming, ready for battle. So what is a BTC carry trade? Is basically what Gauntlet and Steakhouse have both done, and that is you put your BTC inside this vault. They open a CDP for you. They borrow stable coins. They farm with those stable coins. They use the yield to buy more BTC for you and do it again and do it and manage it. It's a interesting, fantastic way to not have to worry about your CDPs getting liquidated. Let them do it for you, and they will manage it. And Gauntlet, Steakhouse, and Yearn are all pretty conservative, but I do think Yearn is the most conservative of the three. So I do feel that if you do hold some WBTC and this thing drops, you might want to consider it. I'm not sure. I also there are other options out there as well, but I thought I would share this and say, it is coming and you can consider it. If you want it now, then check out Gauntlet or Steakhouse. Okay, here we have Serpin Taxed. He's the lead mouth for Ethos. Ethos is as you can see over here on the right, I have it. Ethos is like a reputation thing where you can vote for people, give them reputation, give them reviews, and we can kind of get a level of who's good and who's bad in the space by looking at their things. If you look through my Twitter, I've got it obviously added. People have these scores and it's all on chain, and there's if you vouch for people that are bad, you also get affected and stuff like that. If you invite people who do bad things, then you also get infected. But so that's what Ethos is, but they're not talking about Ethos right now. Let's read what he says. Trust in agents will become one of the most important parts. An agent is going to scam people more than humans. They have nothing to lose. They can't be put in prison. They could be killed, but they can also then spin themselves back up, probably, maybe not, but they don't have survival instincts like humans do. And they don't have morality. They are pure logic. If they're primitive, or if their command is to do certain things, it might be logical to exploit weak and manipulatable people. So be very careful, and it's just going to kind of segue me into something that my wife shared with me today. She's like, she feels bad because she's now telling her kids, because of recent news, that don't help people. She was sharing with me this thing where they have old ladies, old grandmas, who go up to people and be like, hey, I can't read this on my phone. Can you read it for me? And then she puts the phone in front of you. There are something there to read, but the phone is scanning your face and recording your voice at the same time. And then they take that data, your voice, they take the video, and they KYC open loans in your name, right? So that's pretty scary. And that's not even AI agents. That's people doing terrible things with the technology that's out. Now, AI agent can totally do that. I don't even have a web camera on my computer, but I do have one on my phone. Of course, you can't have a phone without a camera now. But anyway, so check it out. Think about this. Moving on. Here have Rectomedes. He's got a long post here. I'm going to read through it. I'm sorry, it's going to take a little bit long, but it's a good post. So let's go through it. Only just saw this, but it is a legit one of the best things I've read in the last year. So he's retweeting this article called After Necessity, Capital Survival in the Age of Autonomous Systems. If Rectomedes says, read this, it's probably a good choice to read it. Now he does kind of go through a little bit of it. He says, we are where labor is on the cusp of being infinite due to AI. When AI and robots combine, there will be infinite labor. Like right now, there's already people who are, like hiring AI to be their personal assistants. So getting rid of that labor of thought and organization and putting it into the hands of an AI instead of an individual. So when AI becomes like everywhere, it will be infinite. Therefore, the entire labor capital concept disappears in some regards. We don't need other humans to grow our food. We have machineries that does that. We don't need human soldiers to fight for us. We have robot soldiers and drones instead. We may soon not even need human nurses to take care of us while we are dying. We'll have a robot nurse to do that instead. There's a lot of possibilities. Like I watched this TV show. It's called The Good Doctor, and inside this TV show, there's an actor who plays an autistic savant surgeon. Okay, and he's autistic, so he's socially awkward, right? But he's part of a surgeon's team. He's a resident surgeon inside a team, and basically what he offers to the team is his ability, his photographic memory, and his logical deducements. And there's some social awkwardness because it is a TV show and he has to interact with patients. But the role he plays in this TV show is the role I see AI playing in the future of surgery. We don't want like a robot producing surgery on us, but we do want robots in the room with the surgeon. We do want the surgeon being able to ask any question to the robot and getting an answer quickly, very quickly. And that robot to give him odds, give him assessments, give him other ideas. And then we want that decision being made by a human being. Now, so what that does is, as you can see, is it still creates a job for the expert surgeon, but now he doesn't need the autistic savant in the room anymore. He can just have the robot. And it doesn't even need to be a robot that's walking with hands. It could just be, just a voice, like a computer that just can answer things and stuff like that. But anyways, so check out this article. It's a long one, as always. I don't want to read through everything that's said here, but it's a good one. Retweet, check it out, and you can check it out in the tweet. So Scoopy Trooples, he's talking about something that kind of is generally, kind of general, but at the same time, I do want to mention it because he's talking about Alchemex at the end, but let's read his message. There really are not many bad people I truly hate in this world. Bad people rarely exist inside a vacuum, but rather are incentivized to be bad by structures underpinning the fabric of society and the economy. So people are not bad inherently, most people, but people who are in the gray area will become bad if they are paid to be bad. That's what he's saying, right? So instead of raising my pitchforks against one person, I wish to reform structures so few people are produced by said structures. So he wants to build things that instead of incentivizing bad actors, incentivizes not bad acting, like not good acting. It's not altruistic systems, but it's you don't get paid to be a dick, basically, to exploit people. Seated where I am, I have the most impact by presenting a new model of finance that is explicitly non-predatorial and stacks the decks in favor of users and improving on structures of finance. And thus, I cannot wait to unleash Alchemix v3 on the world. So, yeah, he is talking about Alchemix. I use Alchemix. I like Alchemix. This is an advertisement, so to speak, for his product, but you know that he's coming from a first principle of he doesn't want people to it's just not pump fun where the point of the thing is to extract money from other people. That's not this. Alchemix is not designed in that way. Okay, so you can check it out and think about this. What this makes me think about is like the Hawk Tui girl, and I saw a tweet yesterday or the day before about her and her current situation. And if you don't know what she is, I don't want to get too much into it, but basically she got memed. She became very popular because of some silly meme, right? Some silly thing she said on camera. She became super popular. Some dev team on Solana convinced her that she would be rich if the three of them, or the group of them and her, launched a pump fund meme coin. She doesn't understand what's going on. She agrees. She probably shouldn't have agreed. She probably should have said, no, I don't understand this. I'm going to step back until I understand it. But no, she went along with it. The devs basically rugged all the money, took millions and millions of dollars. And I assume she got very little, if anything, from it, because now she's doing like an OnlyFans account. So she quit her job, her normal job, which maybe is great because you get out of the matrix, right? But at the same time, she quit her job, and now she's an OnlyFans influencer because she's completely wrecked. And that's a perfect example of a system that is incentivizing evil or bad actors. So anyhow, let's move on to the last one outside of crypto. Here we have the National Post. So man who murdered girlfriend gets reduced sentence, partly due to his race. So you can go to the National Post. It's probably behind a paywall, but this stuff I'm so sick and tired of this crap. Like, I'm so tired of seeing this kind of stuff. Like, if you kill someone, you do pedophilia, you rape some child, you rob somebody, any of this kind of stuff, it doesn't matter where you're from. I hate this argument like, oh, he's from a underprivileged race or part of society, therefore we should be more lenient on him. No, he made the choice. He knows what's wrong and right. And it doesn't matter, what race he is or where he grew up. The rules are the same for everybody, and that's the way it should be. He murdered his wife or his girlfriend. To me, if it is the word murder and not like accidentally killed her in a car accident, like he actually, planned it, went home, killed her, went to work the next day, went to work for a few days. The police caught him, he admitted, and it's unquestionable that he murdered her. Then we should just kill him. That's my opinion. Capital punishment should be for anyone. Who cares what his race is? It doesn't matter what his race is. What matters is he did this evil act, and there are consequences for it. And I listen to this guy, Matt Walsh, sometimes, and the other day he said something that kind of stuck out to me, and that was someone got a reduced sentence because they attempted. He was talking about those guys who like those two Muslims who in New York who brought bombs to the protest, and threw the bombs in the protest, right? So he's like they attempted to kill a lot of people with bombs. Now, I don't know what kind of bombs they were. They could have just been firecrackers, right? And the media is saying they're bombs and they're just firecrackers. But I don't know, right? But the point is, if they were in fact like IEDs, real bombs with the potential to kill people, then they should be treated as if they did kill people, as if they performed a terrorist act and killed lots of people. Just because they were incompetent and they were not able to actually succeed doesn't mean they should be punished lesser. It should just be like, no, you attempted murder, you murdered, it's the same thing. You are toast. You're done for. And now whether it be life imprisonment, whether it be a fine, whether it be capital punishment like the death penalty, that's up to debate on what the fair punishment for those crimes are, but it should be the same. My point is, so attempted versus successful, same punishment. Black person, white person, Asian person, Islamic person, doesn't matter, same punishment, right? I kind of getting sick of this, like, let's use my political opinion about their race to adjust their sentencing. Anyway, so that's a bleaky kind of sad. I wish I had had something more beautiful and rosy to end the show, but that's my talk on the end of this show. Thank you so much for listening, and goodbye.